Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin. We'll be taking a look at some of the macro situations that Bitcoin finds itself in and giving my thoughts and opinions on the setups that we see. As I get into this video, if you find this useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe. And if you haven't yet joined us in Discord, check it out guys, you are missing a trick. It is the first place that we go to notify you of everything that is going on in the crypto space. Keep a finger on the pulse of crypto by joining us down in Discord. Let's jump right down into this one, right? I'll try to keep it brief, but yet still concise with all the information that I think is important to know at the moment. So really what we're going to do is we're going to spend some time. There's been a lot of requests for an update on the Wyckoff accumulation pattern. So what we'll do is we'll take a look at this, see what's going on here. I'm not a big fan of the Wyckoff patterns myself, but it is something that I think it's worth kind of knowing just so you can kind of get peace of mind in places. So accumulation patterns, we had this drawn out a couple of different ways over the last kind of month or so, trying to find one that plays out and one that doesn't play out, essentially, if it is something that we are in or not in. A lot of people want us to kind of have been done with a spring event, but that's an impossibility as far as I see it for many different reasons. But nonetheless, the only way that I can see this is at the moment a big phase A, up here where we are just coming out of phase A going up into the resistances. You'll notice that on the right hand side here we have two patterns. We have pattern number 1 and we have pattern number 2. This is because Wyckoff accumulation and Wyckoff distribution, and just Wyckoff in general, they're patterns that are all about manipulation, about manipulating the price action in order to get a desired result. Usually it is all about going after the liquidity. They're looking to buy Bitcoin in this case, or they're looking to sell Bitcoin in this space. And when I say they, what I mean is large institutional players who have the funds to be able to drive the market in specific directions. So two patterns. One pattern, pattern number 1, this one has got a spring event, and pattern number 2 does not have a spring event. This is designed to trap as much people or as many people as possible, okay, because if you expect a spring event and you go shorting the market, well, the liquidity is slightly higher in the price chart, they can take the price up higher, liquidate you, grab all your money, and there'll be no spring event. Likewise, if you believe that you're going to the moon and you're going long before the spring event has occurred, then they'll bring in a spring event. So basically, there's a pattern here that always means they're going to win. They're going to go after the money wherever the money sits. It means you do not expect just a spring event is going to happen regardless. It's important that you pay attention to where the money and where the liquidity is so that you can prepare yourself to go long or go short or just do spot trades and stay safe. Okay, so two patterns. Very important that we understand that. Pattern number 1 is not the only Wyckoff accumulation pattern, even though it's the one that is spoken about the most. It is probably one that is not likely to occur unless, of course, there's sufficient a number of people going long on the market. And, well, isn't that a case of where we are right now? So we'll keep an eye on that. So let's talk about this. We've got our preliminary support up here, our selling climax down at the low side. This would be in November. And up here we would have May 2022 as our PS, right? We then have an automatic rally lower than the PS up here. This would be February 2023. A secondary test, I don't like how high this sits, but a secondary test is here. This would be March 2023. Resistances is where we are right now. Still got to push a little bit higher, possibly more towards that 30k resistance line. But we can deal with it being where it is right now. This actually comes in line with testing the PS, and you can see that's testing the PS right here as well. So again, we can see this being an interesting area. We're finding a lot of resistance right up here on the previous PS. Okay, so that kind of does tie in very, very nicely with this area being basically the top of our phase B. Okay, which means that we are in or looking for a secondary test in phase B. This is the same regardless of which pattern you follow, and it would put us down lower than the selling climax that we saw in phase A. This essentially would put us down, in my opinion, more towards that kind of $13,000, $14,000 level. It'd be interesting to see what gets us down there. It could be a number of different things. If this were to play out, I mean, there's a lot of stuff going on around Binance and ZZ, so maybe that's what drives us down as a black swan event, if you want to call it that, with a lot of people panicking and getting out of crypto because of what's going on around all of that. It's possible, but nonetheless, we'll see how this kind of plays out. Like I say, these patterns are, just because you can map them up in lots of different ways doesn't necessarily mean that they are actually in play. It requires institutional players to be manipulating the price. And I do see a lot of manipulation in the price action, but the Wyckoff accumulation pattern is very specific. So it'll be interesting to kind of see how that goes on. I've said this many times already, and I'll say it again just for the sake of this video. This Wyckoff accumulation patterns, there's nothing in the history of everything that's going on over here that tells me that we've had that spring event. I've been through this before, I've drawn it up before, and I've shown you guys many times that we could not have had a spring event thus far. It's possible though that maybe we've got some kind of movement out of here, and this area, what is currently marked up as secondary test of phase A, is actually more the LPS of phase C. That's a possibility, and we can look at this as maybe up here. If we want to be really bullish about it, maybe we're just ending phase D and going up into phase E. That's a possibility, but again, I don't think you really have the data that supports that idea at the macro level. So yeah, it's one of those. We'll see how it plays out. It's lots of different possibilities. Like I said though, I'm not a Wyckoff expert. Not really fond of the pattern, but it is what it is, and we can draw it out as we see it. So it'd be interesting to kind of see how the chips do fall when it comes to the Wyckoff accumulation pattern, 1 or 2. Both are very interesting in terms of approaches to the market. So that's kind of where that sits. That's a brief update. There isn't really too much because this is a daily chart. It's going to take a long time for stuff to play out here. This isn't like a quick, rip a band-aid off. You're down at 14k, then the next day you're back up at like 30k. Right? That shit doesn't fly. Right? This market is slower than you might want it to be, and it can be incredibly frustrating at times as well. So in terms of looking at Bitcoin through the Wyckoff lens, this is an interesting approach to it, but it'll be more interesting to see what happens next. If we were to drop down lower than the AR, which comes in at 25,250, then we definitely wouldn't be in the phase D situation, because that wouldn't drop down lower than the automatic rally, because that's a support level. So that will kind of confirm that we're not in the phase D or E areas according to this way I've drawn it anyway. So it'd be interesting to kind of see how that plays out. Okay. So that's the brief update on Wyckoff. There isn't terribly too much more to kind of talk about that. Now, if I take a look at this one, if I get rid of the other one, there we go. Here we can kind of see that we're in this this channel upwards, right? And this is a problem because higher highs and higher lows have a tendency to break down, right? They don't go upwards forever, right? So we have this kind of move going up here, and we are up in the supply zone, the resistance line, which also happens to fall in line with the PS from previously in May 2022. You can see all the resistance right up there, and you can see that this is also an area that of previous demand turned into supply. So we know that there's problems all around this area, not only in the higher highs, higher lows and supply zone areas, we also have those major resistances in there as well. Now, if we take a look at it from a smart money concepts point of view, we have all the fair value gaps. These fair value gaps have been left behind, driven from institutional manipulation, in my opinion, dragging that price up higher in a logical way to drag the price up higher. You don't leave these fair value gaps alone like this and just stack them up without retracing and filling them out. So price has to come down, in my opinion. We're talking sub 20k minimum, in my opinion anyway, for a nice healthy correction to take out those fair value gaps. Even though this is bullish on the smart money concept side of things, we still have to consider that these gaps that are left behind are unnatural, and they should be considered something that we have to kind of come back down to and fill. Can take time to do that though, so just bear in mind. Again, we're on the daily chart here. This is going to take quite some time. This actually gap was left behind in January, right? So it's taken 3 months to go up there. Could take another 3 months to come down for all we know. So it can sometimes be fast and sometimes be slow. Can't time the market. All we can do is say that it's highly likely and highly probable that we have to move down and fill out these gaps. Okay, so from everything that's looking like here on smart money concepts, it's really interesting to kind of see not only do we have those resistances that we're hitting right up here, we have have the fair value gaps left behind on there as well. We are, of course, bullish in terms of the bullish structures that are here, and we do have the price action currently above the 50 and 200 EMA. But again, I think the bigger macro piece isn't looking great, so expect some turbulence. Now, when we take a look at it on a slightly zoomed in version of our daily chart, we can also see that we're in this little kind of channel up here, right? It's not a bull flag, right? I know people want to be a bull flag, but it's not a bull flag. Bull flags go down, and what's tilting upwards isn't a good sign. So higher highs, higher lows, and they have a tendency to break down. So we can see that also at the smaller level as well as the larger level, right? So we have our larger level here looking like this, starting all the way down out the low side of October 2022. And then we have our smaller scale stuff going on right up here, also signaling that a reversal is likely to occur at some point soon. Now, we do want to kind of point out that the momentum indicator is looking pretty bullish at the moment. So expecting to maybe push up slightly higher. I still think 30K is going to be our major resistance lines. We haven't hit those yet. We're pushing up a little bit, but we haven't got there yet. So keeping an eye on the momentum is correcting. So we could still be testing this channel on the slightly higher side before we break on down. I'm not saying that we have to break down right away. That's going to take time, but it does look like we probably have another push to the upside before we can actually start talking about that move to the downside. So overall, I would say that the bigger macro piece is quite bearish, specifically when we think about, you know, the Wyckoff accumulation pattern that's going to be potentially bringing us down into a new lower low and a secondary test in phase B, at least as I've drawn it here. Then, of course, we have things like our supply area at the moment. We've got our channels with tilting upwards, which have a tendency to break down. We have all the fair value gaps. It looks like a natural correction on the kind of weekly time frame is going to be required. That could be quite some time before it plays out. And until then, we might actually have another push up higher. 30K is going to be our major blocker. I can't see us really pushing past that, but you know, it's crypto. Anything is possible. Let me know what your thoughts are down in the comments below. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I really do appreciate that. If you're new, subscribe. If you haven't joined us in Discord, check it out. Linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.